Hello everyone, and welcome to Cashology, where we learn how to grow your wealth. Today we will introduce the stock market. Did you know that there are companies behind your phone, your coffee, your car, and everything you use? You can actually own a piece of them. The stock market connects everyday people with the world's biggest companies. Let's learn how it works so you can invest in your future and make your money work for you. Before we get into it, we would appreciate if you like and subscribe to support our channel, so we can continue providing high-quality content to help you understand your finances. All right, let's dive in and get down to basics. So what exactly is a stock? A stock is a piece of ownership in a company, a share. Think of it like owning a tiny fraction of a business, no matter how big or small that business might be. When a company needs to raise money, one way they do it is by selling these shares to the public. When you buy a stock, you own a slice of everything that company owns. That includes their factories, their intellectual property, their cash, and everything else that contributes to the company's value. These shares are bought and sold on stock exchanges, which are essentially marketplaces for company ownership. The most famous of these is the New York Stock Exchange, or NASDAQ, which is heavily focused on technology companies. The price is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up, and vice versa. The exchanges themselves don't own the companies. They just provide the platform and rules for trading to occur. They ensure fair practices and transparency in the market. Most trading happens electronically now, through online brokerage accounts and sophisticated algorithms, but the principle is the same. Ownership can be bought and sold easily, allowing investors to participate in the growth of companies and potentially profit from their success. When you hear the market is up or down, it's a general statement about how stocks are performing overall. It's usually about indexes like the S&P 500, which tracks the performance of 500 of the largest publicly traded companies in the United States, or the Dow Jones Industrial Average. Don't stress too much about daily swings. The market can be volatile in the short term. Remember, you're buying ownership in real businesses, with real employees, real products, and real potential for growth. So why would big companies want your money? They want to continue growing. Building factories, inventing products, and expanding all require cash. Instead of loans, companies sell shares to raise money through an IPO, initial public offering. You give them cash, they give you ownership and a shot at their future success. If the company grows, your shares become more valuable. This is called appreciation. For example, if you buy at $10 and sell at $15, you made $5 in profit per share. Another bonus are dividends. Some companies share profits with you as a thank you for being an owner. It's extra income on top of any potential stock price appreciation. They will give you a bonus every month, every 3 months, or annually. For example, they may reward 10 cents for each share you own. If you own 1,000 shares, that would be an additional $100 per quarter. Aside from stocks, there are also ETFs, or exchange-traded funds, and index funds. ETFs are bundles of multiple stocks combined into one investment that trades like a single stock, offering instant diversification. Index funds are similar to ETFs, but are designed to mirror the performance of a specific market index, like the S&P 500, and are typically low-cost, long-term investments that don't trade throughout the day. All three are common ways to grow wealth, with varying levels of risk and involvement. Now let's discuss how you would actually buy a stock, ETF, or index fund. In today's days, you would create a brokerage or investing account with companies such as Robinhood, Charles Schwab, or Fidelity, for example. The good news is that most online brokers now charge zero commissions for stock trades, which makes investing more accessible than ever before. After you create your brokerage account, you will link your bank account to transfer in cash to invest. Once your account is funded and you're ready to trade, search for the company's ticker symbol, like AAPL for Apple. Check out the price and decide how many shares to buy. To buy, you're going to place an order. Typically, you would place a market order, which buys at the current price. There is also a limit order, which lets you set the price you want to buy at once the stock reaches it. Once you confirm your purchase, your broker sends the order to the exchange. The system matches you with a seller, and in seconds, you own the shares. Selling is just the reverse. Place a sell order, and the cash will be sent to your account. You're officially a shareholder. It's fast, secure, and easier than ever. Here's a few tips for when you start out. 1. Don't feel pressured to invest large sums right away. It's better to start small, even just a few dollars, until you feel comfortable with the process. 2. Investing isn't gambling. It's not about luck or chance. It's about carefully putting your money into a business that you genuinely believe will grow and thrive over time. So, do your research and understand the companies you're investing in. 3. Be patient. Some people trade stocks daily to try and profit from quick moves, but most investors focus on the long term, buying and holding for years. 4. Losses are a natural part of investing. They happen to everyone. The key is not to panic when you experience them. The market is always fluctuating. Over time, the stock market tends to go up. Historically, it's averaged about 7 to 10% annual returns after inflation. 5. Create a diverse portfolio. The more stocks you invest in, the more you minimize your risks. Your portfolio will be protected if one investment performs poorly. Remember, the best investors are lifelong learners. They understand that the financial landscape is constantly evolving, and staying ahead requires a commitment to continuous education. They are always seeking new information, analyzing trends, and refining their strategies. Start paying attention to the business world around you. Observe the companies behind the scenes that shape our daily lives. Connect the products you use to the companies behind them. Think about why you choose certain brands over others. What makes them successful? What are their strengths and weaknesses? Follow financial news. Stay informed about market trends, economic indicators, and company announcements. Understanding the news is crucial for making informed investment decisions. The more you learn, the more confident you'll become. The stock market can seem confusing, but once you understand the basics, it becomes a powerful tool for building wealth over time. If you found this helpful, please hit like, subscribe, and let me know in the comments what investing topic you want to learn next. Thanks for watching.